Great. Thank you, everybody, for joining to the Stockton REI Network. Tonight, we have a special investment opportunity to share. Our friends over at Flite are here today to present the Stockton REI Network with an investment opportunity. The Flite team is Paul, Sherwin, and Matt. I consider them good friends in the real estate industry, and they've been really crushing it, hitting it out the park. They're part of the Stockton REI network. They come when they can and they participate in the Slack groups. So I thought it was only great for them to also give an opportunity to people who are in the network for a potential investment opportunity. We're going to keep it short and sweet. On my part, I'm going to transition over to the Flite team to introduce themselves and go straight into the deal that they have. So Paul, Sherwin, feel free to take it away.
Great, thank you. Thank you, Willie. I have known Willie for many years, early on in your real estate career. We started our investment career in Stockton, which is why we're part of the Stockton REI network. We had 3 properties there, almost 50 units. We've just sold some of them. We still have 1 left. So we have a presentation today about our new self-storage opportunity in Spokane, Washington. We will go through the offering memorandum, probably go about 25-30 minutes through the offering memorandum, and we could allocate some time at the end for some Q&A session. So excellent. So yeah, like I was saying before, this is a self-storage opportunity in Spokane, Washington. It's actually in downtown Spokane, the city of Spokane, which is an excellent location. It's a 6-story building with a basement level below, so 7 stories total, over 400 self-storage units and 7 offices plus bulk storage. And we'll go through all the details of this deal, the floor plans, the strategy, and go through all the numbers as well. So, as a big high-level overview, like I mentioned, this is a 7-story building that includes the basement. 414 self-storage units, 7 offices, plus a big allocation of square footage for bulk storage, meaning that it's just open warehouse, but it also, down the line in the future, gives us the opportunity to build more self-storage if the tenant decides to move out or whatever. All in all, it's 414 units right now, but if we were to completely build out the units, we could probably hit around 470 units or more. We got this under contract a few months ago for $6 million. The seller is actually a developer. He acquired this property a few years ago, was going to build out multifamily units in this property because of its prime location in downtown. COVID hit and their team pivoted and said that, I think it might be best to build self-storage because of the lack of inventory and the high demand in that area. So all the units are being built out are brand new. So we're going into this deal pretty much almost 100% brand new self-storage units being built out. A lot of CapEx being spent on infrastructure such as mechanical, electrical, plumbing, fire suppression systems, stairs, elevators, etc. So we'll be taking this building vacant. So we have our job as value add will be to lease this up with a great partner, Storage Pro, and bring it up to full occupancy, and then stabilize the property over the next few years. The seller has identified a property in Idaho that they want to 1031 exchange into, so they're pretty motivated to get this done and close. So we're looking at closing escrow late April, early May. We've been raising capital for this deal, and we're on a good clip right now. The overall presentation, we're just going to kind of go into our team. We're also going to go over the executive summary of the deal, and then we're deep dive into the numbers, the rent rolls, the pro formas, P&Ls, and then we're going to go into the property overview, go through the plans, the photos, sort of the Spokane market at a high level, and then some of the investment options that our investors may be interested in. So the Flite team is myself, Sherwin, and Matt. Matt was not able to join us tonight, but he's here in spirit. Flite team, we started a few years ago and we focus solely on multifamily in the Northern California market. So, like I mentioned earlier, we started out in Stockton. We started building our portfolio in Sacramento as well. Picked up, I think, 3 properties, about 70 units plus in that area. Sold off a couple of the Stockton properties and Sacramento properties as we buy these value add assets. Do the work, rehab, turn the tenants, increase the rents, and then sell them. Typically within 14 to 18 months. I myself, in my prior life, used to be an architect for a large global firm. Have about 19 years of architectural and design experience, construction and project management. I've always been in real estate, commercial real estate, since 2005, but decided to go full blown into it a few years ago, as I love this more than my previous job. Sherwin?
Oh, hi, I'm Sherwin Gonzalez. I'm probably seen some of you guys chatting in the Slack room, so I do exist. I know I've been kind of active on there on and off, but I haven't been there on so lately, so I apologize. But I'm originally from Honolulu, Hawaii. I have a similar background to Paul. That's how I actually met. We used to actually work together in an architecture firm. We worked on the Airbnb project back in the day doing tenant improvement office spaces. So I went to college in LA. Then after LA, I moved up to the Bay Area and worked with a lot of different clients, as you say over here, like with Google, Airbnb, Salesforce, Autodesk, Apple, Intel, all kind of like the big tech companies. And also on my last job that I worked at, I also got introduced to hospitality and multifamily. I worked with kind of like big hospitality companies like Fairmont. I worked on the Pebble Beach lodge renovations there. And I also worked with some developers like Aimco and One Hotel and so forth. So I have a portfolio right now, just a side portfolio, me and my wife before we started Flite. We have like about 7 doors right now, just consisting of a bunch of single family and small multifamily. And with Flite, as you can see, sort of like our kind of like our track record there, we have a current portfolio value of about a little bit over 20 million. We've have 8 assets right now. We've had 8 assets and exited 3 with an average, net IRR for 41.77. And I think what makes us a little bit different is that we're able to kind of leverage our W-2 backgrounds and transition that into our real estate investments. I mean, Paul kind of touched on that earlier. We have 15 plus years of investing in real estate just in our side portfolio. And that consists of single family, multifamily. Paul has commercial buildings. Matt has like Airbnb rentals, and we've done some flipping on the side as well. And on top of that, we can piggyback off Paul and I's 18 plus years in architecture, design, and construction management. That's why we're not afraid to do kind of deep value add deals, because we've been doing it for so many years in our W2 careers. And Matt, who's not here because, he has a family crisis where he has to take care of 2 boys and 1 girl right now. He has the accounting and finance background. So back in his W2 days, he was a CPA for high net worth individuals that invested in real estate. So we're able to kind of combine all our knowledge here and kind of leverage that W-2 background into our real estate investments, and just real quick, just outside of real estate, I enjoy, when everything was open, I enjoy kind of traveling the world. I enjoy snowboarding. I used to DJ back in the day. I'm into fitness, running, and so forth. And I'm into like streetwear and street gear. It's just a little bit of my personality and so forth. And, Matt said, just to introduce Matt, because he's not here, he likes to, he's a big dude. He likes to work out. He plays lacrosse, and he has two boys and 1 girl. I myself have 2 kids. I have 1 boy and 1 girl. And Matt has Paul has 1 daughter as well. So that's what sort of got us together as Flite, because the F in Flite actually stands for family, and we really wanted to find some way to kind of free up our time, have this flexibility where our time to spend more time at home with our family. So we're like, what better way than to do it through real estate investing? That's why, all of us are in this group here right now. So that's sort of like our quick kind of background on Flite.
Before I go into the next slide, just to briefly go over the structure. So I handle the asset acquisitions, Sherwin handles the asset management, and Matt, who has a finance and tax background, handles the risk and tax management. So generally, I work with the brokers and the lenders to find all the deals, both on the buy and the sell side. I work with Matt closely on underwriting these deals, making sure all the numbers are legit and the deal structure works well. Sherwin, once the asset is under our umbrella, Sherwin takes over and works with the property management and make sure all the rent rolls and the tenants and deal with all that stuff. Since Sherwin and myself do have architectural backgrounds, we are hands-on and we do design ourselves, both the interior and the exterior of these properties under contract, that's under construction. The executive summary, we're just going to go over the, go a little bit deeper into the property itself and the deal structure. Again, like I mentioned, it's a $6 million acquisition price, over 400 storage units, 7 offices on the first and second level. We're anticipating a stabilized gross monthly rent by year 3 of $57,590. We're looking at an annual cash on cash of 8% spread over 8% annually over the 3 years. And hopefully we're looking at an IRR of 21.5%. Now, the property highlights, it's a pretty good sized building. It's a 1911 build. It's a little bit on the older side, but because the interior and exterior has been renovated extensively, it's got a new lease on life. We expect the interior build out to be completed by mid-April, I would say. We're estimating a 12-month lease up time after we take over. We'll dive into that a little bit later. And of course, like I mentioned before, we have additional room for storage units where we allocated bulk warehouse storage that we could build out more storage units once the tenants turn. In the middle, there are some highlights on what's being installed. Like I mentioned, MEP, lighting, suppression system, new camera security systems, elevators, fire escapes. In terms of the deal itself, we're looking at a $2.5 million capital raise for this deal. That's all in, includes down payment, fees, et cetera, et cetera. There's a $50,000 minimum on this. A 10% pref is offered on this with the typical 70-30 split. And we're projected for a 3-year hold. Given our track record, we typically underwrite for 3 to 5 year holds because that's the industry standard, but we've been turning these around fairly quickly, and our average is probably like under 18 months hold, which boosts the IRR numbers. Going on to the next one, the strategy. We do have a great partner lined up, Storage Pro. They're a nationally known and have a national footprint of managing self-storage assets. We've been in talks with them for many months about this deal, and we're working through the fine details of what the strategy is, what the branding, what the lease up, what the rates should be going into this. We're looking at a 12-month lease up period. We will do probably like concessions in the beginning, maybe 10% below market rates to get as many tenants in there as possible. The great part about Storage Pro is that since this building is sort of a mixed use, you could say, it has offices and self-storage units, they're able to manage both tenants who lease out the office spaces and the self-storage units. Going to the next one, we do have all these numbers laid out for the capital and investor returns. It gives a high-level overview of a $6 million purchase price with the private lender financing is 70% LTC, which is a loan for $4.2 million. And then you go down all these numbers of all the closing costs that we have, and it comes out with a final equity requirement of $2.5 million. Now, having said this, we typically underwrite for 70% LTC to stay on the conservative side, but we've been shopping around with various lenders, probably like over 10 lenders. We partnered up with CBRE, who is our loan broker, and we used them before in many of our deals. And all the lenders came back at 75% LTC because they love this deal so much. So if we were to proceed that route and accept a 75% LTC, the down payment will go down. The capital raise will go from $2.5 million to something lower, like 2.2. And all these numbers you see on the right, the projected IRR, the equity multiple, all that stuff will tick up because, of course, we're using a little bit higher leverage for the same result at the end. So once we sign on the dotted line of which on the term sheets on which way we want to go, we will issue a revised sheet like this that show what the new numbers are, new and improved numbers are for this deal. Typically, as in our past deals, we do charge an acquisition fee of 2%, a debt placement fee of 2%. We are not charging an asset management fee, which we typically do in our past deals, and no construction management fee, just because the construction majority of the construction has been done already on this. And Sean's going to talk about the Spokane market.
Yeah, just a little about the Spokane market. Part of kind of Flite's investment philosophy is that we like to invest in tertiary neighborhoods just outside of big cities. That's why you can see you look at our website, some of our first couple of properties and all our properties actually are located in Stockton and Sacramento, just outside of the Bay Area. And we invested in these in the past 2 years because we kind of felt like as people seeing now, people are kind of migrating out of San Francisco because it's too expensive to live out there. And now since people can work from home now, they're kind of migrating towards Sacramento, towards Stockton area where it's a little bit more affordable. So that's sort of how we kind of see the Spokane market is it's just about like a little bit over 4 hours drive away from Seattle. And I have some friends in Seattle. We have some contacts in the Washington area. And a lot of people are kind of bleeding out towards kind of like this is like a east of Seattle towards Spokane just to have a better lifestyle. They can similar to Sacramento and Stockton, you get better bang for your buck out here. So just from a regional area, and this we just found kind of like a study where, this article kind of mentioned that Spokane will be kind of like the top 10 real estate markets in the country post COVID in 2020 and 2022. So this is kind of exciting news to us, and more honing in more where our storage facility is located at in the Spokane area, but more specifically in the downtown area, really located in the heart of downtown, where there's always, or there's already been so much redevelopment around the downtown area and within the downtown area, and more development going into that area. And I don't know if Paul mentioned it earlier, where the city of Spokane actually approved this storage facility to be the last approved storage facility in the downtown area because they foresee more multifamily or more retail commercial buildings around downtown. So it's a pretty unique situation for us to kind of like, provide that demand in this specific market. Yeah. And as Paul kind of briefly mentioned, a big part of this success of our project is the lease-up plan. That's why we went off and got people who actually manage storage facilities, because we know that's not like our expertise. And we got Storage Pro. They've been around since like 1975. And what's great is that they're local. They're local. They're based in Walnut Creek, and we have an office in San Ramon. So we're nearby them. We can kind of work hand in hand with them to kind of execute this lease-up plan. And they've kind of done all these studies, with the demographics in Spokane, kind of looked at the surrounding areas, and they've done this for all their properties that they manage all over the US. You can kind of look at their website and kind of see their track record and so forth. But based off the demographics and their studies that they have and their research, they came back to us and said, we can achieve like 95% occupancy in 12 months. We're like, great. What is it based off? Based off the total population, based off Spokane area. And more importantly, based off this downtown location where it kind of brings kind of this increase in traffic and demand being in this specific location. And they did further studies where we're thinking, because we're in the downtown area, well, we can leverage sort of like the businesses and commercial spaces as well, which will be some of our client profile, because we asked them, what is going to be our tenant profile, our client profile, right? And they did mention the vast majority is going to be residential customers versus business, only because there's a lot of multifamily around this area. So there's a need for more storage in this area. And on top of that, Gonzaga, we'll have some, vicinity maps of seeing where these locations are, but Gonzaga University is not too far from this location as well. So they'll have an influx of also students using the facility, but they're mindful of that because, the turnover for students, they're only there for a couple months and they leave back and forth. So they're mindful of it, but maybe in the first initial year, will be more acceptable with students and maybe businesses and so forth, just to lease up the space and get some income generated in year one. So this is some more of the analysis that they've conducted basing their 12-month kind of lease-up strategy. And just real quickly, why storage versus any other type of asset class, just the benefits. Well, throughout the years, the asset class returns for storage have been actually pretty high, higher than other assets out there, higher than office, retail, and apartments. You kind of see the percentages near there. They're also kind of, they call it recession resistance, kind of insulated to the recession. This is kind of proven in the past year with COVID. I mean, during the last year, a lot of people downsize or school shut down. So where did they put all their stuff? In self-storage facilities. And on top of that, a lot of people didn't move their stuff out of storage, because who wants to move their stuff out of storage during a pandemic? So it kind of proven the whole last year of, being self-storage being sort of like a recession resistant asset class. That's why we're kind of excited to get into this real estate asset and offer this to our investors. Another great thing is rent growth and positive IOI. I mean, the whenever we raise a rent for storage, it's not really price sensitive. You could raise it by $5 or $10 a month. Okay. Versus like, say you raise a multifamily unit by $100. Typically it's a lot of hassle for someone to rent a moving truck, go to the storage facility, pack up their stuff, and move it to another storage facility because their rent got raised $5 or $10. So that's why we like the beauty of self storage and you know economies of scale. We have 414 units, raise each one by like $10, increase the NOI by 414 times 10, just like that. So, and on top of that, like any real estate asset, there's a lot of cash flow tax and tax benefits here investing in self-storage. There's some cool little video that you can look at, kind of explain kind of like the history of the self-storage and where it's kind of going, and some other stats about, the self-storage as being low maintenance, kind of low overhead, and little infrastructure for existing tenants, unlike kind of like multifamily or single family or so forth.
Yeah, I just wanted to quickly add regarding storage that we frequently use our lenders as a barometer for how good an asset class is. So what I mean by that is, for example, multifamily and storage has consistently ranked high in stability and desirability. So our lenders would say, okay, yeah, we like multifamily, we like storage, so we'll offer you 75% LTC or even 80% LTC. Versus, let's say, if you go out and acquire an office building or a strip mall or retail space, the LTC actually goes down to 60 to 65. So they're looking at the risk of lending out that money depending on which asset class. And storage and multifamily has always been up there in terms of risk management aspect.
I'll just quickly go over these next two slides. We did some kind of like asset market study, more kind of specific to our location, kind of seeing, the subject area. And we did some studies of, the self-storage almanac. There's like an almanac that comes out every year about self-storage. And, typically the most popular size is like a 10 by 10, and the next popular size is 5 by 10s. And you'll see later slides. This self-storage, the majority of the units are 5 by 10s. But we also have 8 by 13s, which is kind of equivalent square footage to a 10 by 10s. And that tends to be the most popular size units, which we're accommodating in this space right here. And again, it also stresses out kind of like the demand for the storage area specifically in the downtown area, not so much just for self-storage, but also for office space. We kind of have a nugget here because we have to, like Paul mentioned, there's like 7 office spaces. So we did look at the demand for office spaces as well. And being in a downtown area, the studies show that the location suggests that there'll be no problem between having demand for the office space, even in a post-COVID world. And it kind of, that statement is kind of validated because we just got Paul just talked to the broker, and we're already in talks to kind of lease up the 7 spaces with potential tenants. That alone just shows we already have demand even before we close the property. So of course, that's going to adjust the numbers if they kind of, if you can sign these tenants before we even close, which is great because then day one we'll have some income coming in, and we just have to worry about leasing up the storage facilities. And the next slide, same thing here, kind of like a supply demand. Is there a demand for a storage facility in the area? And you kind of look at kind of like, Spokane as a whole, where, in our downtown area, we're really kind of like the only, there's a few smaller kind of storage facilities around the downtown area. The only difference is they're pretty old. We're like the only brand new facility that's going to be in the downtown area. That's why we're going to brand the name as Wall Street Executive Storage. The next nearest self-storage I think is More Storage, which is like a mile or so away. They're an older building, and I've talked to brokers and they say it's just a crummy building. there's rats, there's pests, there's holes, there's like chicken wire between the walls and so forth. So our building next to theirs is going to look luxurious and gorgeous and so forth. So there is supply and demand in this Spokane area. And just quickly, some of the self-storage facilities that are planned around there are actually outside of downtown. You kind of see like out in Spokane Valley and towards the west and towards the, so not really in downtown, because I mentioned before, the city really is kind of putting a halt on kind of self-storage facilities in the downtown area. And just another point, because we're using Storage Pro is actually managing two self-storage units in the Spokane Valley. So they already have a presence in this area here.
So I'm going to deep dive into the numbers a bit. The pro forma rent roll that we have here breaks down all the different storage sizes that we have, how big they are in terms of square footage, the number of units of that particular size, and what the monthly rate stabilized is. Stabilized meaning year 2, year 3, and the gross rents on the right side column. We broke it down into storage units, and then we'd also have commercial space, meaning offices. We do have 7 offices. I think there's 2 on the first level and 5 on the second level. We also do have loading dock storage units, which is a unique size, much larger than the regular ones up above, that hopefully do have a premium to them. And then on the basement side, we do have bulk storage as well. Other income is insurance fees that we charge for leasing up to tenants and merchandise. So we plugged in some numbers over there as well. Diving into the year 1 through 5 pro forma P&L, you can look at this, all these numbers from T12 year 1 through year 5, which has the gross income, all the expenses of operating this property, our expense ratio below, which is pretty much hits the industry standard or slightly less. It's probably going to be run more efficiently, and our capex and maintenance costs will be much less because this is brand new. And we also have other expenses such as the debt payment. We underwrote this going in with a private loan with a little bit higher interest rate because it's not a stabilized asset. It is a 12-month lease up. So halfway through year 2, we're thinking we're underwriting that we're going to go into a little bit more conventional loan with a lower interest rate, hopefully cash out some equity to redistribute back to our investors. And then this would be the debt payment going forward. We've done a huge amount of study in rent comps for self-storage units ourselves and with Storage Pro. So we took all the different storage facilities within under 5-mile radius of this property. The red dot is where we are, and all the blue dots are all the nearest self-storage units. So downtown Spokane is right here. So we're looking at our nearest competitors, one to the left and one to the right, and one a little bit outside of downtown area. We also looked at the office rent comps because we do have an office component to this deal. We have looked at both with Storage Pro and our contacts at Colliers International, and we're looking at leasing the market rates probably around $15 a square foot per year. For office spaces, they range anywhere from $15 to $18 a square foot, depending on location, size, condition, et cetera, et cetera. So we plugged in, I believe, around $15.50 a square foot per year for the office square footage space into our numbers. The property overview, we're going to go through the property itself, show you some beautiful pictures of the site. Like I mentioned before, it's completely renovated inside out. We've got new infrastructure systems in the property. We have 414 self-storage units, and we believe that there's a high consumer and corporate demand for the downtown market. Financial firms, attorneys, medical offices looking to lease up storage units. We also have the office component for this deal. This is like an axonometric of all the floor plans broken down. Street levels down over here. We have a basement level down here. The green is bulk storage, the blue is the self-storage units, and the red is the office space. So you can see that the storage units are concentrated up above in levels 3 through 6, and the offices are located on the first and second level, and then the basement has a component of both bulk and self-storage. You can see it better in this plan where it's all broken out to all the different sizes, 8x20s, 8x13s, how they're all broken out. The circulation, we do have 2 exit stairs here and the elevator right in the middle, so that's easy access to all the storage units. The offices, you got one office here, a larger office on this side, which could be office or retail. Would love to get a Starbucks in there, but I'm not sure. I think there's a Starbucks like a block away, so we might not get that. On the second level, we do have 5 offices here, and then this green, we show it as bulk storage, and we show it as self-storage. So this is we're going into this deal with bulk storage, meaning that we're not going to build out these units, but this is the potential layout if we were to build them out in the future to increase the 414 number to something a little bit higher. In the basement on the right side, we do have the bulk storage in green, and then we have this building out the self-storage units on the left. So we actually have a layout for the green area with self-storage units and all the different sizes, and we'll probably proceed building that out as well. So it'll be more than 414 units. Some pictures, we went there about a month ago. It was snowing, very cold, but it's this bridge you see here over left is our train tracks, as elevated train tracks for like cargo trains, I guess. It's not passenger subway or anything like that. And then you can see the high spaces for the first and second level here and all the different floors on up above. We do have a loading dock right over here, so the trucks can pull up right into this area, into the loading dock, and unload their contents. We also, on the right side on this photo, we do have other loading docks as well. We have 1, 2 more openings, and the trucks, this is an alleyway right here, and the trucks can pull up and unload their stuff as well. This is a basement picture. It will be built out, so you can tell, it has all new lighting, fire suppression, new paint, and everything is just ready to be built out. I think they're building it out in the next few weeks for this bottom basement floor. First floor, the front door is this, new storefront glazing system with wood paneling. You walk in, you're met with the stairs that go up to the second level offices. On the left side, you'll have office. On the right side, you'll have office as well. And you'll see, some of the office spaces up close in these photos. And then in the back of the first floor is more storage units that will be built out pretty soon. This bottom picture on the left is that loading dock on the previous slide I showed you. The trucks could back up here to elevated loading dock, unload their contents, go straight into the elevator into their storage units. Second floor, you go up these stairs right here. You got 5 offices all in a row, divided up. So this is a slab and column concrete build. So these partitions here, you could just easily knock them down and make large office spaces depending on what the tenant needs.
Yeah, Paul and I back in the day when we worked for a big corporate architecture firm, that's all we did was kind of tenant office improvement spaces. So if we have to modify these spaces per the demand and the needs of the space, we're fine and comfortable in doing it because we've been doing it for so many years in our W-2 days.
Going up to the upper levels, you could see how the storage units are being built out. Some of these are swing doors and you put locks on them. Some of the larger ones are roll-up doors and you put locks down here to secure them. All new electrical panels, elevator systems, and fire suppression systems, as well as lighting.
Yeah, just real quick, just the vicinity of where we're located at as compared to like kind of regional map outside of Spokane. So we're about 5 minutes away from Gonzaga University, as I mentioned before. We're really close to the university. We're about 6 miles away from the airport, about less than 10-minute drive. And there's also an Amazon fulfillment center in Spokane Valley, about 13 miles out. So, and I think they're building another fulfillment center, not in downtown, but just outside of downtown as well. So, you got kind of big companies kind of moving in. And when you have big companies moving in, that means there's jobs, population is going to increase and so forth. So that's sort of what's going on in a regional level. And then as you get closer to kind of like the local map, this is kind of like the developments I was kind of touching on earlier, where we kind of have, a bunch of kind of mixed use buildings taking over historic buildings and kind of renovating it into, retail and commercial down below and apartment buildings up above as well. There's also this place called Kendall Yards, which is almost kind of like a mixed use center. You see kind of like the picture on the right, like a lot of commercial space, a very vibrant kind of, activity filled kind of center there. And more specifically around our area, you kind of see all the different kind of multifamily buildings that have been built, just within the past couple of years. Are pretty brand new buildings. And all of these are kind of luxury, high end, mid to luxury, high end kind of mixed use kind of spaces and multifamily spaces. And I just found out that, if you go to the next one, Paul, like specifically in the downtown area, not only we're surrounded by kind of like the hospitals down on the south, we got like a bunch of hotels and offices in the downtown core, but just a block away, the Columbia building over here, they're planning out a $3.5 million project here on the upper right hand. Yeah, right there in that corner. And then right here, about another mixed use site with about 50 more apartment units in the upper 5 floors. So we kind of see this kind of development going on, and the city is kind of pushing more development in the downtown area. And as you guys know, you guys are, real estate investors here. You kind of want to be invested in a property or in a location before they're developed. So we're trying to put our stamp here, get this self-storage unit in the heart of downtown, and just watch all the development around us happen and just have the demand for our space. So, and just real quickly going over kind of like the investment options, Paul kind of touched on a little bit earlier in the slide, where we kind of have, two types of investment options: the equity side, which is we're offering 10% preferred return and 70-30 split. And we're also offering debt, which is 8% on 2-year. We offer debt because a lot of people, not a lot, but some people were wondering, 3 to 5 year hold is kind of a long time for them. So we offer, there's also opportunity with debt for a 2-year hold, but they can't participate in the upside of equity if we sell the property and so forth, refinance. So it's just kind of like a simple debt. So we offer kind of both options for investors. And some people do both. They do maybe some in equity and then some in debt, or one or the other. And just real quick, kind of like our investment schedule, sort of like our Flite kind of process is, right now we're currently in the soft reserve kind of process right now. This is going to be like probably this month and bleed over for a little bit about next month, where we kind of, gauge your interest. Soft reserve is not, you're not committing yourself to the deal. You're just telling us, hey, I'm interested in getting more information. You tell us about how much money you're interested in. And then from there, we put you on a soft reserve list, and then you'll get to review the subscription documents, which includes kind of like the PPMs, the own operating agreement, the subscription agreement showing more detail about the property, all the kind of like the docs that we have our lawyer kind of document. And once you sign the subscription documents, that's when you're sort of committed to the deal. And upon signing that, we'll give you wire instructions to wire the money. And then from there, we just kind of wait and close the deal. And all this we do through communications, through email, text, phone, whatever, with our investors. And this is all going to be through our investor portal, which will also walk you through. So don't worry, it's kind of like the steps are kind of laid out here, but we'll walk you through through all these details and steps through emails and communication and so forth. And this is sort of like the timeline of, when we're kind of expecting these different processes to happen. And we get this question a lot. And so we kind of added this slide. Hey, what happens after we close the property? Or, and this goes hand in hand with not just our self-storage, with our multifamily properties as well. So for this particular property, we'll issue quarterly investor reports, and kind of on the right, you kind of see a sample of, some of the information that you receive from the quarterly reports, as far as like metrics, your amount invested, your returns, your distributions to date, etc. And, people always ask, well, how and when will I receive distribution? So after we close, you'll be on our investor portal, and we ask for you to kind of update your contact information, including your address, make sure you got your updated contact information, your name, your number, and so forth. But on top of that, also have your ACH information, because typically we just wire or do direct deposits into your account, any distribution. So it's really seamless and really easy. And all this is done kind of through our investor portal. Same thing with our tax documents. Earlier we said Matt has a background in taxes. So we create kind of what's called a K1 tax document that we issue to our investors, in which you give that K1 to your CPA, and from there they can, do your taxes with that as well. And how can I track my investments? Through the investor portal. You can log in. From there, you can also see current investments that are available, and also past investments that we've exited. And you can see, and being part of the portal, you can see a little bit more detailed metrics of our exited kind of projects that you probably wouldn't normally see. We won't show that in our website alone. And of course, the number one thing is kind of like investor communication. How can you get a hold of Flite? We're easily, I guess, attainable by email, phone, text, Slack group. In this day of social media and age, it's pretty hard not to contact us, and we'll do our best to respond to you in a timely manner and so forth. And that's kind of like we're a small boutique kind of family oriented company, and a lot of our friends, a lot of our investors have become friends and vice versa and so forth. So we listen to our investors, and we love hearing feedback, good and bad, because at the very end, it makes us better investors and able to better communicate our investment opportunities to you guys. So, and this is just like, pick your poison. Whatever social media platform you want to follow us on all, follow us on none. One thing that's missing, we do have a TikTok. I kind of set up a TikTok account just to mess around, because that's what the kids are using these days. So we're also on TikTok if that's your poison. But we typically post stuff on like on our Instagram and our Facebook, and you can also follow us on our social media as well. I'm sure at the end maybe we'll give out our personal contact information as well.
So the attorney told us to put us as a non-endorsement disclaimer. So you can read that on your own time, and that's it. So yeah, this is the deal that we're very excited about, this opportunity in Spokane. Will you welcome any questions that you may have?
Awesome. So if you have any questions, feel free to come off of mute and ask them. I think that's pretty funny that we're going to get investment updates from TikTok. So that's pretty cool. So one question to get us started, Paul and Sherwin, in terms of previous deals, how long does it usually take for you to get fully subscribed? Do you get a lot of initial traction? I'm kind of curious, for somebody who's interested in this, how long do they have until potential, or are you going to be keeping investors' interest on a rolling basis? I'm kind of curious about that.
Yeah, sure. I could talk quickly about that. In our past deals, we've been fully subscribed anywhere from within the first week of issuing the offering memorandum to a month out of issuing this. It depends on the deal size, of course, how much the capital raise is, et cetera, et cetera. One deal, we actually had one investor just fund the whole thing, and we partnered up, JV'd with them. For this particular deal, it is a larger deal, a larger cap raise at $2.5 million. We are over 50% subscribed since, March 9th when we issued this.
A couple weeks ago. A lot of them are repeat investors who have made money in our past deals and want to, roll funds into the next one. A lot of these are new investors as well. And some of these are going to be capital partners who have their own network of investors that will that they want to partner up with us. So, like I said, we're about a little bit over halfway point in terms of the capital raise now, and we have about, let's say, a month to go to raise the other half. Now, the big asterisk is that, like I mentioned before, if you go from 70% LTC to 75%, that'll reduce the cap raise by a couple $100,000, and that'll actually, we might hit our target earlier than our projected. Yeah, and just to add to that, it's timing as well, Willie. Like I remember last year we had a deal under escrow towards the end of the year, raising capital for that, and the majority of our investors were waiting to figure out what's going to happen with the election. And on top of that, it was a COVID year as well. So we had a deal earlier, first quarter of last year. People were kind of holding off what's going to happen with COVID. So it's all kind of like, deals with those kind of the market conditions, investors' appetite as well. And, as Paul mentioned, like we've had deals where it depends on the amount of raise as well. Our first couple of deals, I remember we had to raise maybe $300K, which we're like, oh my gosh, that's a lot of money. And luckily we had like an investor kind of come in and do that. Now we can, raise that and probably like from one investor. right now. So that's why we like to do these webinars. We like to kind of like, you know, put our name out there, and just about just kind of gaining trust with investors and so forth. So it kind of varies. And just to add on to about Paul's point about being over 50% kind of subscribed here, for the soft reserve, there's no really commitment. It's kind of like issuing kind of your, so we won't stop like the soft reserve list if we already reached 2.5 million, which is our raise. We're going to keep that list going because we'll need extra, because not everyone may follow through the deal. So we're not going to be like, okay, guys, we're at 2.5. There's no more people on the soft reserve list. No, we're going to keep people on the soft reserve list, and we're going to keep people on that list for future deals as well. Like, oh, you know, Willie was interested, but, you know, timing wasn't right, so he decided not to go to a deal. So you'll be top of mind for that, and we'll ask you, hey, you're interested in that last deal. Here's another deal for you as well. So it's not until you get the subscription documents and you sign it and you wire your money when you're fully committed into the deal. So it doesn't hurt. It's free. You can be on the soft reserve list, read the subscription documents, and kind of go from there. And kind of like the schedule wise, we kind of went through that one slide. It's probably like, we'll probably be in the soft reserve list probably until like mid-April, you think, Paul, right? Kind of like next mid-month, probably we'll get the subscription documents kind of out.
Yep.
We got to figure out
Yep.
with our lawyer and their timing and so forth. So.
Great, thanks for that. Chris, Jackie, and Miguel, if you have any questions, feel free to come off of mute or type it in the chat box.
And if you know, if you guys come up with questions after, you know, after the presentation, feel free to email us as well. We can also answer anything offline as well if you kind of remember, you know, afterwards, like, oh, I wish I should ask this, or wanted more information about this, you know.
Another question I had was, I'm kind of curious, how much does the average investor come in terms of investing with Flite? What does that typically look like?
So our investment minimum is $50,000. On average, they're about $100,000 each. We've had investors on the range from anywhere from 50 to like $500,000. So yeah, it falls in that range, but the average is in the 100K.
And we have had investors that maybe mentioned they can't do the max or the minimum of 50K. Maybe they would come in with 25. And we do accept investors who want to invest in the, you know, below the minimum, like case by case basis. We usually suggest to those investors maybe partner up with like a family friend or another friend that wants to invest with you 25K as well, so that you can meet the 50K minimum. But maybe only one of you guys is the main point of contact, because, you know, we don't want like a bunch of 5,000 minimum investors in a $2.5 million raise, you know, just manage wise from the management standpoint. That's you know, we're trying to, you know, be mindful of kind of like our investor relationship work after we close the deal and so forth. So.
And for this, do you have to have the funds in like a personal checking or savings account, or can somebody use their retirement funds to potentially invest?
Yes, you could use your retirement to invest. Matt would know more about it. I think it's called self-directed IRA or something like that. But
Yep.
yeah, we have accepted funds from retirement accounts in the past.
Yeah, one note that we had investors go through that in our last deal. You know, depending on who your solo K provider is, just check with them on timing, because it does take some time. We had an investor that made it, just got the transfer, did all the paperwork right before we closed, which is fine, you know, but it's just the timing wise that you might be mindful of, and it all depends on your different providers and so forth. But yeah, we accept you know, solo Ks, cash, you know, from a check account, or even like 401K. You can pull cash out of your 401K as well. We have investors do that as well. So.
Great. Cool.
Nothing in the chat, right? Yep.
So let's say in terms of somebody who does want to move forward with investing with Flite, so what is the process? Should they reach out to your social media, your email? I'm kind of curious about how they get in touch with you.
Yeah, the best way is, actually there's a couple best ways. You go to our website and register. So we have your contact info, and we could send you this deal or any future deals. So you're on our email group. You can email us directly as well. Put a soft reserve into this particular deal if you're interested in that way. So the best way is email, so that, or a website portal, so that you could get the conversation going.
Yeah, and even if you're not, maybe self-storage or this particular deal isn't your cup of tea or not ready to invest right now, feel free to contact us. We like having conversations with our investors and like to know what are their goals. The better we know your investors, what you're expecting, and the type of investments you're looking for, then we can kind of keep you in mind. Like, oh, Willie said he wanted like multifamily in San Jose. This might be a good deal. Then we'll contact you maybe first batch in the deal. Hey, Willie, we got this deal. If you're interested, you're the top first class list because you told us you're interested. So you look at this deal first before we send it out to anybody else. So we talk to investors all the time, whether they're interested in multifamily syndications or single family or commercial or so forth, just to kind of share our experience and knowledge, so.
Great. Yeah, I guess along those lines, Sherwin, if somebody isn't exactly interested in this particular deal, this investment type of property or this location, is there anything in the queue for Flite in terms of other investment properties your team is working on?
Oh man, Paul can answer. We email our brokers every day. Hey, any updates on this? We have multiple offers on deals right now. It's just we got some stubborn sellers out there. We also have deals under escrow that we're selling right now. So we have multiple projects kind of going on at the same time. But Paul can kind of touch on like the asset acquisitions part of that question.
Yeah. So yes, we do have deals in the pipeline, not under contract, but we're working toward getting it under contract in Sacramento market, in the Bay Area, multifamily and self-storage. Based on our track record, our philosophy is buying these off-market deals, value add deals in terms of rehab and management. So a lot of our deals are very different from what you see in, let's say, like middle America or East America, where people pursue cash flow. We try to pursue cash flow, but we see the equity, especially in California, just because of the way it is here in the real estate market, that we find these value add deals and build the equity through being hands-on and implementing these strategies to increase the value of the property and ideally exit or refinance or whatever it is earlier than 3 to 5 year underwriting.
Yeah, and I chat with investors like every week, and they're like, "Oh, Sherwin, we like what Flite's doing. Want to invest one day? I'm just not ready right now." I go, "Well, I'll just put you on the investment portal. You can be up to date. We'll send you offering memorandums as you come. If anything, it'll get you, kind of situated and kind of used to seeing these offering memorandums. You kind of learn the jargon of the syndication. You see what a equity thing is, a preferred return, and the more and more you review these offering memorandums, when you are ready, boom, you already know what you're looking at. You already know what you're seeing at, and you can pull the trigger right away. It's a good learning experience for people as well. And, that's pretty easy. Just contact us. We'll have a conversation. And, if it's a good match, then, you can be on our investor portal, and we keep you updates on the OMs and so forth. So.
Great. Awesome. So we're kind of coming up on time here, but Paul and Sherwin, I just wanted to give you guys a few minutes for closing remarks. Feel free to close us out with any information you want to leave us with.
Yeah, sure. So yeah, thanks, Willie, for setting this up. We're very excited about this opportunity in Spokane. Yes, it is our first out of state, but the deal is so good that we couldn't pass this up. We love the self-storage market. We love the Spokane market, and everything kind of fell into place for this one. So we're very excited about this one. We do have other deals, hopefully, in the pipeline, maybe a little bit more local. We're also looking at Arizona, Texas, and other markets as well. But we're very excited about this one and future ones as well. So reach out to us if you're interested.
Yeah, I just want to thank everyone as well for your time. Thank you, Willie, for setting up. I'm glad we're able to get this set up one day, and I'm glad I got to join at least one of your meetups.
Yeah.
It's really like pitch back door. But yeah, if you guys want to contact us, you can contact the team at fliteinvest.com. That's FLITE invest.com, or Sherwin at fliteinvest.com, or Paul at fliteinvest.com, and sure Willie, if you send out like a follow-up email, you can put our contact information there where, they can contact us. So
Absolutely. Thank you, Paul and Sherwin, Flite team, for coming and presenting this opportunity. It seems super compelling, and I hope it provides value to your team as well as the Stockton REI network. Again, if you are interested in reaching out to Paul, Sherwin, and the Flite team, I will add their website details to this video. So thank you all for coming and attending. Paul, Sherwin, thank you again for taking the time to offer this to the team. And if anybody has any questions, feel free to reach out to them. And that's going to be it for today's session. Thank you, everybody, for coming.